The scary reasons why Michael Burry is selling out his stocks. His predictions have been so successful that many average investors want to emulate him. Michael Burry predicted a 2008 crash, while other investors did not. For today's video, we will be going to talk about the scary reasons why Michael Burry is selling out his stocks. Let's get started. Conclusion. Michael Burry is one of the world's most successful money managers. His stock market activities are certainly noteworthy. He has significantly reduced his portfolio. This year, he completely sold out most of his positions. Despite the fact that he has been in a few bubbles, he believes that the next one will be far worse than the previous ones. Burry appears to have taken a step back and reassessed current market conditions, since selling most of his positions while deciding his next move. He's laying out what could be the sequel to The Big Shot. Bowie, like Buffett, has a sizable cash reserve. This could indicate that they are both expecting stock prices to plummet. He stated openly that the market is volatile right now. He's selling off his holding, indicating how much he's skeptical of the market right now. The crash has arrived. The evidence is in the Burry's portfolio. Why? Method to his madness. Michael Burry's investment strategy is based on what he frequently says. If you're wondering why he's selling so much and not holding positions for too long, all that is required to hear him speak. Burry has compared the current market boom to the dot-com bubble, and compared today's options trading frenzy to the rampant speculation that caused the Great Depression. He even tweeted a screenshot of a financialweb.com stock chart at one point. The defunct company behind the Stock Detective and another financial information website saw their share price nosedive from a high $28 to a fraction of a cent, following the dot-com crash. Burry mentioned a very common chart back in the day that looks vaguely familiar. He didn't stop there though. He then compared the bull market that lasted 15 years until 2000 to the stock market's recent run-up. He highlighted a 94% correlation between the Nasdaq 100 performance in each of those periods and a 95% correlation for the S&P 500 index. His stance is unequivocal. There is an impending market crash on the horizon, and the conversion of his portfolio to cash reserves should be a sign of things to come. This raises the question, is this correct? And, if so, what are you doing to prepare for what Bowie believes will be an unavoidable correction? Michael Burry third quarter stock sell-off. Now consider how he is investing to capitalize on the four warnings. According to the most recent filings, Michael Burry has sold the majority of his positions in the companies in which he has invested since the last recorded quarter. This reflects his feelings about the overall market climate. Michael Burry continued the heavy offloading strategy he had used all year in the third quarter. The strategy demonstrates his strong emphasis on the impending doom and gloom of the financial markets. Let's begin with the positions that he completely sold out of. VY Global Growth WTS, which made up less than 1% of his portfolio, was completely sold off, so VY Global Growth was just over 1%. Golden Ocean Group and its nearly 6% stake were completely sold off, together with the SunCoke Energy Incorporated, which accounted for 8%. Another 8% of his portfolio stock, Marinos Pharmaceuticals Incorporated, was sold. Scorpio Tankers Incorporated's nearly 10% stake was also sold. You'd think Michael Burry was done selling, but in the most recent quarter, he was clearly looking to get rid of any holdings that didn't fit his overall outlook. This included a 14% stake in Ovintiv Incorporated and an 18% stake in Discovery Communications Incorporated. Aside from the stocks that he completely sold, he reduced his position significantly. These were divided into two stocks. The first was CoreCivic Incorporated, in which he sold 68.30% of his stake. He then sold 53.65% of his position in GEO Group Incorporated. He obviously sold the majority of his holdings and has a smaller stake in these two. The only position that remained unchanged from the previous quarter was CVS Health Corp, which he still holds in full. Michael Burry then added 3 new positions to his now significantly smaller portfolio. Lockheed Martin Corporation is an American aerospace, defense, information security, and technology corporation with global interest. Incorporated is now a global distributor to the oil and gas industrial markets. Synexis Incorporated, the last of the 3, is a biotechnological company that is doing great things in that field. These filings demonstrate that there is a method to Michael Burry's madness. He has been selling a lot of his positions since the first quarter, never holding any for too long. As evidenced by the most recent filings, his portfolio had been reduced to positions on which he can concentrate. This corresponds to his financial warnings of an impending crash, or, in his own words, the mother of all crashes. With a significant portion of his portfolio gone, we wonder what will happen next for the great investor in what appears to be a crash holding. It should be noted that 13F filings referred to are retroactive. Nonetheless, they give us a sense of his intentions in terms of his overall market view. Michael Burry has also increased his cash position, indicating that he is taking a cautious approach. Michael Burry Market Predictions. Burry has issued several warnings about the current state of the stock market. The renowned investor has warned that stock market speculation has reached unprecedented levels since the 1929 crash. This means that the economy is in uncharted territory. He also stated that assets are currently significantly overvalued compared to before the dot-com bubble burst. The market is clearly in danger of collapsing anytime soon. He has also made no secret of his feelings about Tesla stock. His Tesla stock predictions began when the stock was valued at less than a sixth of what it is now. He recently tweeted, "Can Tesla fall 80 to 90%, as many high flyers did after 2000? Amazon dropped 95% decades ago, changed everything and thrived much later." This post was later removed by him. He predicts that Tesla stock will lose nearly 90% of its value. This stock has gotten a lot of attention, as it has set new market price records that exceed its earnings and growth capacity. However, critics are reserved to as whether the stock will actually fall by that much, so that's his prediction. Which aspect of this subject have you found to be very useful? Please let me know by leaving a comment below, and if you enjoyed this video, please press the like button, turn on the notification bell, and subscribe to Wealth-ology for more videos like this. Thank you for stopping by to watch. See you in our next video. Bye!